Hi friends, this is Ravi here from Nama Bengaluru. This is my update for tomorrow, that is 13th of February 2020. 2 days ago, I had told you at 10,600 this market is a clear sell and the markets are heading towards 9,000. I had explained the rationale behind my point of view as to why I am saying 9,000 will come on the markets. Today, markets crashed like anything. Nifty was down 950 points at one point in time. Bank Nifty was down 2,700 points and Sensex was down 3,000 points. This is the single largest cut on Nifty, Bank Nifty and Sensex in its history. Indian stock markets had never seen this kind of a cut. Even I was not expecting that this kind of a cut would come in just a single day. But markets would do things that nobody could expect it, and markets have done what they wanted to do. The reason why markets have taken such a big cut is not because of coronavirus spreading to across the globe, but it is on account of what coronavirus, this epidemic, could affect the world markets. Point number one, China being the manufacturing hub of the world, exports maximum of its manufacturing sectors production to across the globe, US, most of the Asian countries. China's economic activity has come to a standstill because there is this pandemic which has spread now to almost about 100 countries. Most of the Europe is suffering, US is suffering, Asian countries are suffering, and there is absolutely no country which is spared out of this pandemic. So now what is happening? Because of this, China has stopped producing, there is a supply constraint, there is a demand constraint, and there are no exports that are taking place from China. China's largest trade partner is United States of America, where there is $739 billion of trade exists between these two countries. You can just imagine what happens when the trade stops between US and China. Second largest business partner for USA is Japan. Japan is also suffering. So across the globe, this pandemic has caused such crisis that economic activity, for it to come back to its original shape, it would take quite some time. What will happen to this going forward is that the recovery will not be instant, it will not come fast, it will take its own time. Now what is the after effect of this? Other than this, all these things are now known to everybody. Now why markets should crack like this? Just about 3 days ago, if they were good to buy at 11,000, is it not good to buy at 9,000 now? I am referring to this level of 9,000 because today markets closed at 9,600. At one point in time, Nifty futures was trading at 9,412. But now, this is 10:30 p.m. now. I am recording this video. Currently, in Singapore, Nifty that is traded in Singapore is trading at a price of 8,725. That is, again the markets have cracked. Dow Jones is trading down 2,000 points, and most of Asian markets and European indexes are trading minus 10%. And tomorrow being the 13th Friday the 13th, which has always been some kind of a disaster for US markets and European markets, the markets are going to crack big time tomorrow also. 8,700 is already there in Singapore Nifty, and it is only a question of another 12 hours for that to become reality in Indian markets. Forget about all these things. I will tell you 3 reasons as to why the markets are going so bad, going down so bad. You might not have understood this. Let me make it very clear to you. Most of the fund managers who can buy thousands of crores worth of equity and who can influence the market's direction, they have done their homework and they are looking at a price appreciation for dollar and depreciation for Indian rupee. They are expecting a price of about 84 rupees per dollar. Currently it is at 74. What will happen if the rupee depreciates by 15% is anybody's guess. You can understand, imports will become dearer, exports will become cheaper. India is not we are just a service export nation. Software will gain, pharma companies will gain. Other than that, when the rupee depreciates, internally the economy suffers and banks will now have a fresh challenge of NPS going up, because there will be larger defaults by the companies because of the severe economic challenges, severe downturn in the economy and the business loss. So in this scenario, markets are not going to be running fast, they will not recover. So what I would advise you is, even tomorrow at 8,700, I would not advise you to buy index. Rather, I am advising you to go buy some of the quality stocks. I will not tell you which are those stocks. You have to do your homework, because you have not come here to learn swimming. This is a market where you have to surf the rough seas. You have to survive this carnage. If you don't know, then I would request you to please be out of the markets. If you really want to survive and succeed, this is the time for everybody to come and start investing into equities. This is the time not to run away, not to pull out your mutual fund investments, not to take out your portfolio money. I know your portfolio manager has effed it up. I don't want to use that full word. He has effed it up. Your funds have been royally screwed by him. You have given your portfolio and he has made it what was 100 rupees, he has made it 50 rupees. And he will make it 30 rupees also. So please don't give your hard-earned money to any portfolio manager. They are expert efforts. They don't manage your funds well. And I am pretty sure none of the fund managers in India has managed it well. Nobody is successful in pulling out the funds at the highest price. So better thing is, you start investing on your own, learn the subject and start investing into the markets. Quality stocks are available. Many stocks are down 16 years low, 11 years low, and Nifty is down 2 years low. So many things are going to be different, and the entire market dynamics has taken a different shape. It has been completely shattered. Bullish sentiment is completely gone. Bearish sentiment is very strong in this market, and it is going to be there for some more time to come. And imagine if the fund managers, they are expecting a price of about 84 rupees to a dollar, they will simply sell. And even the foreign institutional investors, why do they want to buy, knowing fully well that their currency is going to be appreciating, doing nothing? If their currency, if they hold on to the dollar reserves, if it is going to be gaining 20%, are they fools to come and invest here in Indian markets and see their portfolio go red and lose 25% in a matter of about 1 month? Absolutely not. They know what they have to do with their money. So likewise, I would advise you to do the best research, best analytics, learn the subject. Equity markets is a great place to make money, and you can make good money. Start investing into good quality companies. I know I have already shortlisted a lot of such stocks, and I will be doing it on my own. And I will not tell you as to what I will do and where I will invest. I can only tell you this is not the time for you to buy index. So from tomorrow, when the 8,700 comes, that is not a place to sell your portfolio. Rather, if you have guts, if you have courage, if you can wait for 2 to 3 years, please do invest in the markets. And I will keep updating you about my views. And for this view of my 9,000 coming, please refer to my 3 days back video where I had said that markets will touch 8,600, 700. If the markets are going to be breaking 8,700, then there are further lower levels coming. I know those levels, but I don't want to scare you at this point in time. This is the time for you to go invest into good quality companies, leadership companies. Don't buy 5 rupees, 10 rupees stocks. They will become zero. Make sure that you are here in the markets to make money, not to come and deposit your funds. So if you have liked this video, I would request you to please go and hit the subscriber button and make sure that whenever I upload new videos, you are notified instantaneously and you can look into it. Please share this video, make good money. All the best. God bless us all. Thank you very much.